All right, let's talk a little bit about FDIC insurance. So, FDIC insurance is an insurance policy that protects deposits for customers at banks. Okay. Also protects deposits at institutions called savings and loans, mutual savings banks. And there's a similar product that also provides an insurance protection for credit unions. Okay, so when we think about this, right, we usually think about banks, savings and loans, mutual savings banks, all as banks. Okay, so FDIC insurance will protect deposits at those institutions. And then NCUA coverage protects deposits at credit unions. Okay, now to get the protection of FDIC insurance, it has to be a deposit held in a bank issued account or a credit union issued account, right? So when we get into market account or market holdings like mutual funds, annuities, et cetera, these aren't bank issued products and would not receive the protection of the insurance. Now, when we think about FDIC, there's a simple rule that we can follow, okay? And I'm going to change the order of this as I talk about it a little bit, but it's $250,000 per legal ownership per institution, right? $250,000 per legal ownership per institution. And we'll see some examples of that as we go through these slides. All right, so let's say that Mark and Mary Anderson have accounts at one Lubbock bank. Under the protection of the FDIC, how much of their money is insured? Before we get into this, let's make sure we understand why FDIC insurance exists in the first place. Banks have what are called reserve requirements, which means that for every dollar someone deposits at the bank, they're required to hold a certain percentage of that dollar, right? And the reserve requirement at most banks is going to be 10%. And so if a client goes and deposits $100 at a bank, then the bank is going to keep $10 and they're going to lend out $90, right? And the bank does this because lending money and other activities that they do is how they generate their revenue. Okay. And so what happens if the bank makes a bunch of bad loans with their customers' deposits? Well, the people that they made the bad loans to default on the loan, and then the bank can't make good on the deposits, right? And that would cause the bank to default and the customer would potentially be subject to the loss of their deposited money. Well, the FDIC steps in and says, hey, listen, we're not going to let the mistakes of the bank impact the deposits of their clients as long as they're within the insured limits, right? And so again, it's $250,000 per legal ownership per institution. And it's a protection to those deposits. Okay, so we have Mark and Mary here. So the first thing that we have is a CD in Mark's name. Okay, now he has $150,000 in that CD. So it's under the $250,000 limit. In this case, Mark is the legal owner. This is a solely owned CD at the Lubbock Bank. All right, so the full $150,000 is insured. The next account we have is another CD in Mark's name only. Okay, in this case, we have $200,000, but the legal ownership is the exact same as the first account's legal ownership. Same product, same single owner. And so in this case, we would combine these two accounts to be one ownership type, right? So there's $350,000 in one ownership type. And so we are above what the FDIC would insure for this legal ownership type at this single institution. Now, if we had a Mark's only CD at another institution, then sure, that's going to be covered by FDIC. But because it's under the roof of the same institution, FDIC says we're only going to cover this legal ownership up to $250,000. So there's $100,000 that's exposed to loss in the event of a bank default. So we'd want to restructure this account, right? We'd want to change the legal ownership of this or change the account type so that Mark and Mary could get additional coverage on their money there. Then we have a money market account in Mary's name. Okay, so under the $250,000 limit, new legal ownership. So that's fully covered. Joint checking, fully covered. Joint savings, also fully covered. When we have joint accounts, each individual of the joint account gets $250,000 worth of coverage. And so we could have all the way up to $500,000 in joint accounts and get full FDIC benefits. Okay, so in this case, we have 653 total dollars protected by FDIC. The only thing that isn't protected is the $100,000 overage in CDs in Mark's name only. So let's look at another example. Max and Sandra have the following at First National Bank. Assuming this bank is a federally insured institution, how much of their funds are covered by FDIC? Okay, so we just talked about joint accounts. If we have joint checking, up to 500, so we're good there. A joint money market account. Now, this is a new account type. And so even though it's jointly held, because it's a new account, it gets treated as a new legal ownership. Okay. If it was joint checking, it'd be the same legal ownership because we already have a joint checking, but joint money market is a completely different ownership type than joint checking. And so this full $180,000 is covered. Then we have an individual CD in Max's name. Good. Under the $250,000 limit, it's covered. Individual CD in Sandra's name, new ownership type, $245,000 under the 250 limit, it's covered. Then we have an IRA in Sandra's name that holds a 5-year CD. Now, normally IRAs would not receive FDIC insurance coverage. And the reason that they wouldn't receive coverage is because the investments inside the IRA usually aren't bank products, right? They're usually market investments. But in this case, we have what we can assume to be a bank-issued IRA. And the reason we can assume that is because it has bank products in it. And this bank-issued IRA holds bank products. Because the money's held in bank products in a bank-issued IRA, this is covered by FDIC. Now, if this said IRA in Sandra's name, stock mutual funds, it would not be covered, right? Stock mutual funds are not bank products. They're market investments. Market investments do not get the protection of FDIC coverage. Okay, so an important distinction to make there. And then we have joint stock mutual fund shares. Now we have a new legal ownership, and that money was under the custody of the bank, but it's in market investments, right? And so market investments do not get FDIC insurance. And so this 227 would not be covered. Okay. And so everything in the first 5 is covered in full. And so Max and Sandra have $850,000 worth of FDIC protection. FDIC is something you have to be familiar with. We want to make sure that our clients, especially those that have significant cash holdings, have full protection on their cash. It's not a difficult concept, but it is one where we need to remember limits per legal ownership type, per institution. And as long as we can remember those things, we'll be in good shape to apply appropriate FDIC coverage limits.